Good morning. This is Rich Positive for Critical Points, July 30th. It's 11:38 a.m. Eastern Time. And I want to give you an update of the long-term portion of a gold model that's based on our business cycle or habitual insider tracking, trend following type modeling that has worked very well for me for a few decades now. At any rate, gold bull market, I was on board of it. And then we had what's called an LT3 top. For those of you using business cycles, macroeconomic cycles, you might want to call it a 9-year or the juggler cycle. Okay? And we got a related bear market. And so what this was forecasting this top was peak demand, forecasting that fundamentals would change. And then using an expanded model, we try to find that fundamental story, use a check and balance, use it as additional objectives. All worked out, got a bear market. Got another one of those kind of bottoms. Now, these kind of bottoms and tops occur about once a decade, sometimes a little more often, but generally once a decade. So think of it as the sell signal and the buy signal of a decade. All right, we've got a related bull market. The model is saying that as of last year, it put in at least an LT1 top, kind of similar to a 3-year price cycle, similar to, say, the kitchen business cycle, okay? Now, so what it is an increment. You can see these LT1s here, and then we have a debate right now whether this one was an LT2, more important, or was it here? For the moment, it doesn't seem to matter. What we have to consider is we've got a completed sequence of waves of buying and selling, fundamental economic development, and we also have almost a picture-perfect graphic example of a decade kind of business cycle, the juggler 9-year or LT3, okay, that upside down U or V type shape, okay? What the model is suggesting is not only did we get the LT1 top, but it's possible it was LT2, and if so, that dramatically increases the odds for another LT3 top. If this is the case, gold is in a developing bear market. It's very unlikely gold will pound out record highs over the next 3, if not 5 to 7 years. It's going to have to wait till late this decade and maybe even into next decade when we're super cycle top is due for gold. So we can have some lengthy stalling out range trade, and of course inside of that long-term range trade, some bear markets. All right, and it may be developing this. Now, another scenario, however, is that the model is saying, yes, this was just an LT1 top, that's it. We're going to get the LT2 and LT3 top going out into 2023. It may even last in early 2024. The fascinating thing with that one is that, in fact, I will say it can top out as early as late 2022, 2023, probably not 2024. Now, I see rising inflation in 23-24. I see a little pullback in inflation in 2022. I think we're going to get a little bit of a correction in the stock market, perhaps even a little throttling back in economy. But everything's will be on the bullish side in 23-24 for commodities in general. This gold forecast is suggesting gold's really not that synchronized with commodities. And it's really not that synchronized with the economy, the inflation, and whatnot. What the model is saying is, okay, we got 2 opportunities for this major long-term top. We're either going to get a bull market from this LT1, meaning it has placed a minor long-term bottom, and is now going to rally into late 2022 to sometime 2023 when it'll put in another LT1, LT2, and LT3, and it's all over for about 5 to 7 years as far as record highs, okay? And there ought to be bear markets during that time, all right? Now, the evidence that we need for working for that is we need a new record high. And we need it to occur before the time of those tops so that we have time to be bullish. Now, hopefully we'll detect all of that sooner. What do we have to give us a clue that, no, it really has topped for this major long-term top? We really are in a bear market. Unfortunately, all we have is you've got to violate this minor long-term low in March of 2021. So look at your cash charts and mark that low on your charts. For this specific continuous prompt chart, it's a 1673.30 is the price I'm using. Violation of that, before we get into a bottom due sometime 2023, would signal still lower prices. It's possible gold could collapse and bottom sooner, but it would move sideways and it would be very difficult to move higher until that future bottom's in place. So for the moment, I'm fine with trying to be bullish now into 2022, 2023 with gold. We may have a record high coming with all this inflation. But what I want to point out is you got to watch that March low. You got to realize there's an alternate forecast where we've already seen the once-in-a-decade bull market. It's over. And what I want you to consider is that why is this market so lethargic when we're getting all that evidence of, hey, we got 5.5 to 6% inflation. Another indicator come out today of 3.5%, the best we've seen in years, decades, okay? Why is gold not just going bonkers, just exploding? Well, I guess you could argue it's had a very good bullish run and maybe it's dialed in that inflation already and it thinks it's correct. But with minus real interest rates, and professionals on the street and in the gold industry say you always want to be bullish gold with minus real interest rates. Look at the drop in interest rates in just the last few weeks. And yet inflation stayed higher, if not went higher. That means real interest rates went even lower, even more minus. Why didn't they buy gold? This is a very lethargic market and may just be temporary. It may just not last much longer. But I'm just concerned it's giving us hints that maybe gold is in a major bear market already. More importantly, I think it's giving us hints that the gold market really doesn't see the sustainability of this inflation, and it thinks it's high enough price relative to the lack of sustainability inflation. It's kind of on board with what the bond market's saying. Don't get so excited about all this inflation. Are there even traders in the gold market and bond markets who are even worried about an economic setback and deflation, disinflation? Don't know yet. But we don't have a bullish scenario, in my opinion, in gold. However, violate last month's high, the June high, we will have critical point objectives to put it back near the record high. I'm not saying it will go record, may, but it put it back. Violate a move to a new record high will generate objectives, we think, in the 2200s area, maybe even a bit higher. So there's no question about it. This thing could move higher, okay, into, say, 2023 or late 2022. We could have a developing move right now even. But I'm concerned that choppiness is going to be a struggle. I think people want to trade gold more short term, and they're really not gung-ho and excited about just owning gold as an inflation hedge. And I get that. If you're good at trading and investing, making money out of the stock market, you own some real estate, you don't need Bitcoin and gold. I'm Rich Pazin. Past results are not necessarily indicative of future results. Hope this is a good explanation for in gold. Watch that March low. Consider there's still a chance that we have a major long-term bull market that occurs once a decade is still intact. The market's got problems, but the point is it's got problems. What if we're starting a brand new bear market when gold's going to stay down? And what's the downside of that major once-a-decade bear market that is coming someday and may have just started? We think it's 1,500 to 1,300 for gold. Thank you.